What's up, guys? Philip at Trade Genius. Wanted to circle back around to the cycle repeat graph. We've talked about it where the beginning of August, kind of when this plus token stuff started to dump on the market, that's when we started to see things kind of diverge where the actual price, which is in red, wasn't really following what the typical cycle expectation would have had price do, which is in blue. All right, so blue is if we repeat the previous halving cycle price movement in time. So what I wanted to do was actually go and show you guys how this looks when we measure back from the last peak. So we're going to look at that in this video, and it's kind of interesting to see how the metrics line up. So we'll dive into that. And real quick, guys, if you're still thinking about any of the packages that we're offering, we still have these specials running. So head over to tradelikeagenius.com and check that out. All right, guys, let's dive into this video.
Trade Genius.
Okay, so if we actually go back to our peak date, so essentially we'll go back to the beginning of 2018 to keep it simple. So we'll scroll on to 2018. Again, this is at digitaleak.net, and you can play with this chart there. I think it's one great indicator, great tool to kind of keep things in perspective and see how we are measuring up against price when we're talking about halving cycle theory. So this goes back now, we're comparing from the beginning of 2018, right? So the top last all-time high peaks. And so what we're seeing is when we do that, we kind of see that price more or less follows the trend in both the price and time, right? So they both bottom out around the same time. Then in April, we get this huge departure where instead of consolidating and then start moving up, we just take off. And we never saw that before in the halving cycles. It's just a huge jump. Okay, so there was a lot of demand here. And then we topped out at around that 14K mark and have been coming down ever since. And a couple things to note here. One is you'll notice that we're back on track. Okay, so we've come and we've met up with the price time cycle. We are about where we should be at this point in time relative to the previous halving cycles. So that's the good news. If we had done this move, so if we were at this price level now and it had come up from this grind up, see Q4 we were expecting to be going up into. And if we had done this trajectory versus this one in red, we'd done this one in blue, everyone would be just ridiculously bullish right here. Knowing that we're probably going to level off here a little bit, get through the first of the year, a little bit of a pullback, which is a seasonal thing. You usually do more often than not, you get a pullback in Q1 and then grind higher into the halving. So, but because we had blown off so hard coming out of the bear bottom, everything's more bullish now. So you've attained same point in time, just two different mentalities because of price coming down versus coming up into this price level, right? So it's good to understand this in the psychology as such because of the price action running up to this point. But this is where we would expect to be if we were at the beginning of the year looking forward. Now, interesting thing to note is that when price does go up, you'll notice that even though we moved up, you'll notice price, if you watch the lower band, right? Even though we're like more than double the price, you'll notice that it does kind of follow you see how we come down here? It still kind of follows, and then lower price is stable, we're still coming down, but then see how the price cycle timing, it goes up, price jumps up with it like that. So even though this got way more exuberant and was coming down where the price cycle would be stable and going sideways, price was coming back down because it was just overinflated. And then, but you'll notice that when the timing cycle popped up, you did get a pop in Bitcoin and then comes back down together, and now we've met. So if the plus token dumping is done and that has subsided, it's not as there's not as many tokens from those known wallets being dumped as there were before. We can expect to see probably this fall more in line with the halving cycle. So we'll monitor this going forward, but it's good to know that this has caught back up with the typical halving cycle price. And now we'll see how it follows. If this is the case, we kind of grind, we stay in the range, and then we may see a pullback after the first of the year, grind, and then start moving up into February. Okay, so that would be expected now at this point. So we'll see how that plays out, see how those plus token dumps play out. But I thought it was interesting. I think that it's good to understand how this is behaving relative to the halving price cycles because, in my opinion, a lot of all the other metrics, on-chain metrics and things like that follow the halving cycle. Okay, so that's the driver for all of that stuff. When things, minor capitulation and all that stuff happen, a lot of times it'll just correlate to where we are in time relative to the halving. Okay, and so we bottom out before the halving and we peak after the halving, like a year and a half out or so. All right, so that's really important to keep understand where we are as far as mile markers in regards to the halving cycle. So important to check these types of charts out periodically, and I thought we were due for one in this video. So anyway, next video we're going to talk about the halving cycles, minor capitulation, and where we are with those minor capitulation metrics. Once those turn up, usually that's green light for getting long into the halving and beyond. All right, guys, thanks for watching. Appreciate your likes and subscribes. Keep them coming. Helps us out greatly on this channel. I'll see you on the next video. Take care. Bye-bye.
Trade Genius.